the role of the entrepreneur is to turn problems into opportunities. Right at the end of the day, that's what we do as entrepreneurs. We say, man, 90% of the world says, man, that's a problem. But the 10% that are entrepreneurs go, I'm going to fix that problem and make a lot of value. I'm going to create a lot of value.
Hello, and welcome to yet another episode of the Lewis and Kyle Show, an interview podcast where usually two hosts, Lewis and Kyle, myself being Lewis, bring on really interesting entrepreneurs, investors, authors, content creators, and other people doing extraordinary things that we find fascinating. This episode is a bit different than typical. Kyle was sick, so it's just me in this episode. We still had a great conversation. I interviewed someone named Rob Frasca, who's been a tech investor and tech entrepreneur since the early 90s. His first company, Galt, was one of the very first financial services on the internet, and he's been innovating on the frontier in very interesting online type applications ever since. He was involved in online chat software that is now used in games like Fortnite. And by chat, I mean like live conversations with voices, not text. He has an investment firm called COSIMO, which invests in crypto projects and a bunch of other interesting tech applications. This conversation discusses kind of advice and experience from his 30 years, give or take, in tech entrepreneurship, tech investing, some of his predictions for the future of crypto, some things he'd like to see, some of the theses he has for 2022. And if any of those things sound interesting to you, I'm sure you will enjoy this conversation. So I'm going to switch over to it right now. Rob, welcome to the Lewis and Kyle Show. No Kyle today. He's got COVID, unfortunately. But thank you so much for being here and being flexible with us.
Thanks for having me. It's a pleasure. I'm sorry to hear about Kyle. That's a bummer.
He'll be all right. I texted him last night. I was like, are you going to live? Like, do I actually need to be concerned about you or just like feel kind of bad? He's like, I'll be fine. So
it's crazy out there. It's crazy.
It is crazy out there. So I want to kind of structure this interview. You've got a really pretty long and impressive story in tech and investing and startups. And we'll get into that as kind of some context for some crypto questions and general discussion we'll get into towards the end. I want to ask you about kind of the position in life you're in when you're starting your first startup. I don't know if it's Galt or Galt, but like, what was your age? What was your motivation for starting it? Kind of what was the things you'd done before that? Kind of just walk me through your first kind of real entrepreneurial endeavor, assuming that's your first one.
Yeah, absolutely. So I've always been an entrepreneur. When I was in high school, I was always an entrepreneur. It's kind of in my blood. I think people generally tend to, as entrepreneurs, tend to have it in their blood. I flew jets for the Navy of all things. And I was at Carnegie Mellon back in the 90s, and I was getting my MBA at night, and I saw the internet emerge, and I was completely blown away. Now, this is 1993. And I decided to start a company with another gentleman. His name is Joel Mask. He and I started a company called Galt Technologies. And Galt is actually after who is John Galt, which is Ayn Rand's book, Atlas Shrugged. So that's the reference there. And we started the very first financial service on the internet. First stock quote server, first mutual fund site. We had the exclusive for a lot of financial information on the internet. And this was back in the day when people didn't even know what the internet was. I used to spend my days saying, this is what www. What's .com mean, and that's how early it was. But at the time, I was married, had a baby on the way, and you're trying to pay bills. And you're going, holy cow! I'm going to start a company, and we need to raise money, and how are we going to do this? So it was quite the experience as a 28-year-old guy.
Wow. So that was going to be one of the questions, as well as how old you were. Were you a builder in this project as far as like hands-on technology as well? Or were you kind of like, you're also an MBA, so, you had bought a couple devs or?
Yeah. So back then devs are pretty hard to come by, right? So it wasn't, today development is very much kind of a Lego block type of approach. Being fortunate that I was at Carnegie Mellon, which is a bastion of geekery. I had a lot of friends of mine in the comp sci school that could help. So I know how to code. I'm an engineer undergrad. I know technology pretty well. I definitely know when an engineer is blowing smoke in my face. So I can be a pretty good judge of tech. But ultimately, I did need to hire in serious, technologists to come in. We actually had to run fiber to the little office that we had and put a router in the basement. It wasn't like you just plug into the internet back then when you run a server. There was no AWS. You had to spool up a server, Unix box. You had to really know what the heck you were doing. Not that you don't have to know what the heck you're doing today, but it was.
No, but you can go from zero to deployment in a few
That's
hours.
Right. That's right.
Pocket change.
That's right.
So, or oftentimes free.
Yeah. I mean, the first step of starting.
The
first step of starting my company was I needed $22,000 to buy a Cisco router. And I didn't have $22,000 to buy a Cisco router. So my partner and I, the very first contract that we sold to a mutual fund company, they asked us, well, how much does it cost? And we said, well, let's see, 22, in our head, we were doing the math, and it was, okay, 40,000. They said, all right, we'll give you 30. And we made enough money to basically buy the router. Then we had to buy a Unix box on top of that. So it was an interesting time, but yeah, it was hand to mouth.
Wow. That's pretty funny how those early decisions are made. People think there's so much, there's like this serious calculation in spreadsheets or whatever, but you're like, we need this much money, so that's how much it costs.
Yeah. Well, that was me as a 28-year-old first-time entrepreneur.
Yeah. Sure. Yeah, and that might be something I want to get into later, because I've heard you speak on other podcasts that you really look to the past experience of the team for first-time founders, for second-time founders. I'm curious what things you might look at in first-time founders if and when you're considering them. Or do you not entertain that super often?
I look for passion. I look for this, everybody looks at successful entrepreneurs, and generally all we see is the successes. We promote our successes. We put them out there. We talk about them. Most people don't talk about their failures, and most people don't talk about the number of failures. And quite frankly, I would say that success to failure ratio for real successful people is probably 10-1, meaning that your average guy out there who's really successful has probably failed 10 times for every one success. And so what I look for in first-time founders is kind of the perseverance and passion to basically motor through those 10 failures until you get to that one success. And it's a constant loop of success and failure. And you can't be daunted by people saying no. You can't be daunted by failures. That's what I really look for. I look for that. I look for leadership. Are they leaders? Do they make things happen? And do they listen? A lot of guys have big egos. A lot of women that come in and entrepreneurs, they get these big egos, and they're not listening. They're not open for coaching. They're not opening for help. They're just, I know everything, and they got to prove it. Those are tough. Those are tough people to work with. Those are tough people to, sometimes they're super successful, but what we found is that most times they're not. You get humble real quick as an entrepreneur.
So do you become actively involved in your companies in like some kind of management capacity or board advisory through Cosmos?
Yeah, so
you haven't really introduced yourself to Cosmos yet. So.
Yeah, so COSIMO is a venture fund, and it's tokenized venture fund. We're all in on blockchain, all in. We can talk about that in a little bit. And so what we're trying to do is invest in, really solid opportunities or projects or companies. For us, it's about scale. There's only 4 of us, so we can't be actively involved in every single deal, every single company that we invest in. There's not enough hours in the day. So what we tend to do is pick a few that we really we lead the investment in. We're excited about. We like the team, and we will try to help out and get involved with those companies in every way we can. The other ones where we're not sitting on the board or we're not super active, we'll still always help out in every way possible that we can, because it's a team effort. It's not just about, as an investor, it's not just about giving somebody some cash, some capital. It's really about giving them everything they can so that they'll be successful.
Yeah, that's probably the best way you can break it down based on, just the reality of how much time is available to you and the amount of projects that are of interest to you.
I think it's...
Do you have? Yeah.
I think it's important as entrepreneurs when they look for capital a lot of times people just say, oh, I raise money, and they don't really care about where they're raising the money from. And I think that's a mistake. I think you want to really understand who you're raising the money from, how they can help you, and more importantly, what are their values. So, when you have to make a payroll, when you lie in bed at night wondering how the heck am I going to make this payroll, when you take that great pride in signing the front of a paycheck, right? Meaning you're giving somebody a paycheck as an entrepreneur, and you understand the responsibility of that. That's huge. And I think having investors that also understand those things, who've been there, who understand what it means to lie awake at night going, holy cow, am I going to be able to do this? That goes a long way versus a purely financial investor that's never lived that. And so as entrepreneurs, I think it's important that you understand where you're raising your money from.
Definitely. Makes a huge difference. I want to ask about some of the kind of predictions and theses you might have in some of the portfolio companies. Let's start with like DeFi on Bitcoin, because that's something I don't think gets talked about a lot. I saw you're an investor in Sovereign. Can you kind of explain the thought process behind that investment, the Bitcoin on DeFi or DeFi for Bitcoin narrative, and like straight up Bitcoin versus like kind of like the Ethereum wrapped Bitcoin kind of universe?
Yeah, well, first of all, I would say that our belief is that blockchain as a whole represents the single largest value creation event in our lifetime. I say this over and over again. That's almost my tagline. And I was fortunate having built a bunch of companies through .com and through mobile and a variety of different markets. And I believe that what blockchain really is going to do is really create that decentralized value layer that the internet, that our networked world so badly needs. And blockchain as a whole is going to permeate everything. Anywhere there's trust, blockchains, decentralized trust solutions are going to permeate. It just so happens that Bitcoin was the first one out there. It really illustrated how blockchain could work. It's 46, depends on the day you look, between 46 and 50% of the market, and so you can't overlook it. And so we believe that just given the mass and the liquidity and the amount of value stored in Bitcoin, that it's a wonderful opportunity. However, it's also first, and there are a lot of problems that with the original solutions, just like in the early days of the internet, you had a lot of problems, and those problems need to be addressed. The role of the entrepreneur is to turn problems into opportunities. Right at the end of the day, that's what we do as entrepreneurs. We say, man, 90% of the world says, man, that's a problem. But the 10% that are entrepreneurs go, I'm going to fix that problem and make a lot of value. I'm going to create a lot of value. And so Sovereign was one of those where we saw, how do you bring Bitcoin into kind of an ETH, into a native DeFi world. I think it's a transitional technology, and so we said, hey, let's place a bet there.
Very cool. Backtracking for a second, you mentioned that your company is tokenized, or investments are tokenized, which increases the access. Are those tokens on a blockchain? Because I know it's through a company called Securitize.
Yeah.
Or are they just tokens, but not like blockchain-backed tokens?
They're based on Ethereum. Securitize is the platform that basically puts that token together. We're a security, and so we're not. We have to deal with all of the SEC requirements and the regulatory compliance requirements worldwide. Right? This is a global phenomenon. It's not just the U.S. So our fund, basically what we did was if you think about a fund, it's a portfolio of investments, which is kind of like a mutual fund, and it has a net asset value, which is the value of the fund. And all we did was basically create digital shares or security tokens, and Securitize was the company that did it for us. they're the ones that issue it. So you go to securitize, you do your know your customer, your KYC, your anti-money laundering, AML accreditation in the US. And it does that whole process, and then it issues the security token, and then you can store the security token in your MetaMask or your Coinbase Pro wallet or what have you. We believe.
How do you prevent a shareholder or a token holder to like transfer their token to someone non-accredited?
No, you can't.
If it's like
no, you can't. So what
they have to interface through the securitized platform?
No, you can. What's really cool about these security token platforms is they're actually building compliance into the smart contract. And so, so for our token to be transferred, it needs
like whitelisted addresses.
Yep,
or something?
that's right. And then there are a number of broker dealers that COSIMO X is available on. Texture out of New York, Texture Capital, Black Manta out of Europe. We're an investor in them. InvestaX out of Singapore. We just went. So those are kind of what I would say primary issuance. So you go to the broker dealer, they do the KYC AML, and then they issue the token through Securitize to their customer. That's kind of the broker dealer relationship. But then and that's on kind of the issuance of the token, meaning you're buying it from us, the money goes into the fund. Whereas let's say that you bought your token, or you wanted to buy your token from somebody else. You could trade that token from somebody else, and then the actual compliance is taken care of through a whitelist type of situation. So you could sell, for instance, in the US, you have to be accredited, whereas in Ireland, you don't. So you could be in the US and sell it to somebody in Ireland, and the blockchain would say, oh, that person's in Ireland. I don't have to worry about them being accredited.
Sure. One really interesting investor that I read about is your university, which I think is pretty uncommon for a university to just invest in a venture fund, especially in crypto. How did that come about?
Well, university endowments invest in venture capital funds all the time. They definitely add it as an asset class. I think what's unique about Rochester Institute of Technology is that they're the first major university to own a tokenized venture fund. Now, there are not that many of us. We're the very first evergreen tokenized venture fund. There are others that came out, Spice VC and Blockchain Capital. They came out, but we are evergreen. And what that means is we're constantly raising money and constantly increasing the AUM, the assets under management for the fund. And
versus the other ones. So is a non-evergreen one like the numbered funds, like Blockchain Capital 1, 2, or does that mean something else?
That's exactly it. And generally, generally, if you think about venture capital, right, they're closed end. They generally you're locked up for 10 years. They have capital calls for the first 4 to 5 years, and then you're harvesting the last 5. Most venture funds have extensions because it takes a while for the portfolio to exit. And that's it. They have a closed pool of investors. So what you do is when you raise a venture fund, you go out and you ask a bunch of investors, hey, invest. And you look at the PPM, the private placement memorandum, and it might say it's a $40 million fund, and you do your first close at 20 million. So you go raise 20 million, you close that 20 million, you start investing, and then you raise another 20 million, and then the fund is done, it's closed. Our fund is always raising money, meaning it's evergreen, and we're always making investments, and new investors come in at the net asset value or the mark to market of the portfolio at the time. So it's a whole different philosophy around venture capital. And
serves the yeah.
And we believe that it's unfair for only major financial institutions and high net worths and family offices to have access to venture capital. We think that in general, there's a whole group of people that want access to venture capital. They understand the risk of venture capital and they want a part of it. Number one. Number two, we also believe that this investment vehicle should be open worldwide, globally, to people in all countries and all walks of life. And so that's really the reason why we decided, let's use blockchain. We're investing in blockchain. Let's use blockchain to make this venture capital asset class available to a whole new group of investors worldwide. And that's what we're doing.
Would it be possible for a non-accredited investor in the US it's like a two-parter, to invest in something like an enzyme vault on like MLN or a D-hedge, and could one of those hold your asset? So like if you wanted exposure to you, or is there not a way for a non-accredited investor?
I don't believe there's a way for a non-accredited investor. I ultimately,
so like an enzyme vault couldn't buy.
Yeah, I ultimately believe that the regulatory climate is going to change, and it's going to open up to a broader, open up asset classes like this to a broader group of people. And I believe that that's where things are going. When you look at crypto, people are buying. I think the reason why people are buying crypto, they're buying Bitcoin, they're buying all these altcoins, they're buying the same opportunities that we're buying. We're just buying them earlier. I believe that's an indicator of the macro trends. I think people want diversification. They will want to be moving into different asset classes and get that alpha. Right. There's some really interesting studies around. Grayscale did a beautiful one on asset allocation, and they basically said that if you allocate, and this is back tested over the last, I think, 5 years, if you add 5% exposure of crypto, top basket crypto, to a 60-40 standard portfolio, your risk return attribution increases 52%. So you're getting 52% more yield, more return. Your Sharpe ratio goes way up. So you're getting diversification, and you're only taking 5% capital risk. I mean, there aren't that many free lunches in investing, but that's about as close to a free lunch as it comes. So it doesn't surprise me that something like Grayscale today, the Bitcoin Trust, what are they, 55 billion? They're huge. And in fact, I was on a panel with the founder of Grayscale 3-4 years ago when he was starting it. They were just kicking it off. So I think what it's showing is just the pent-up demand for this asset class, and quite frankly, the diversification. And then you layer in the macro trends, government's printing money like there's no tomorrow. It just adds proverbial fuel onto the fire.
Definitely. Speaking of kind of monetary policy, you have an investment in a project called NDAO.
Right.
I'm kind of curious if that's is that like a precursor to Olympus? Is it something completely different? Like, what are kind of the difference? What is NDAO, and then like how's that different from something like Olympus, which kind of has its own programmatic monetary policy?
In fact, NDAO was out before Olympus, and it is very much like that. When we saw the team, the NDAO team come in, we were blown away. It is basically, if you think about it, it's a currency that is aware of its monetary, its supply and demand condition, and it's actually using algorithms to adjust those and adapt to overall market conditioning. Bitcoin, we love Bitcoin. We're early Bitcoin, we're Bitcoin buyers, we're holders, we believe in it, but we also believe that Bitcoin is really being used as a long-term store of value, and it wasn't really generally designed to do that. And we believe in proof of stake, and we really believe that the market needs, if you think about it, long-term store of value is actually the largest use case out there. It ultimately, especially in the face of devaluing currencies and reserve currencies and all of those kinds of things. So when the NDAO team came in, they said, "Hey, look, that's what we're after. What we're trying to do here is create a self-sovereign proof of stake currency," and that's key. Self-sovereign, meaning I'm not giving my currency, I'm not giving my keys up to anyone. I'm holding onto my keys, and I'm holding onto my currency in my wallet. And the blockchain itself is what's going to allocate or delegate my currency to the staking nodes without giving up custody. And then if I want to run my own node, I can do that. And then I can stake my own currency. But if I don't even know anything about nodes or staking, just by holding NDAO in my wallet, I can earn more. And so that's really what NDAO's trying to do, is really create this proof of stake currency that has an adaptive monetary policy, that has some controls on it that try to reduce volatility. It's early. We're big fans. We're big investors in the project. There's around, I think, close to 15,000 people that are holding the currency. I believe around 40 million of it was issued. It's available on KuCoin, Bittrex, Bitmart, Liquid, and growing. And I think the market is really moving in that direction. That proof of stake, staking is the new mining, I guess you could say.
Sure. Yeah. And I think with the, Olympus's really dramatic year or dramatic month or whatever it was this year, because I feel like it was a short-lived hype cycle that could, revive. People at least have the mental models to be able to conceptualize something like this and understand it more quickly.
Yeah, there's a weird dynamic. I wish I could tell you. I could have it figured out. I don't. But there's a really weird dynamic, and that is, and it plays to kind of the product adoption cycle. So when you think about it, right, all markets follow that product diffusion theory, where the visionaries
early
come
adopters,
in, right, and then you got the early adopters and the mainstream, early majority. And if you think about, most of the people in the crypto space today are probably early adopters, maybe some early majority. But your early majority are not going to put up with the crap that the early adopters are putting up with.
Yeah, the early majority is mostly holding custody or not self-custody, whatever you call that.
That's right. They're holding stuff out on the exchange. They're holding stuff, right? They're not holding self-custody. Whereas I believe that there's a whole class of people that are going to come into blockchain. They're going to come into crypto, and they're going to really get something like an NDAO. Because it's so simple to hold and earn versus some of these other projects where you need a PhD to try to figure out what the heck's going on. And so I guess what I'm trying to say is that maybe NDAO might be a little early, but it's really seeing real rapid adoption, primarily outside the U.S. I think there's about 30 people from 37 different countries owning it. So long-winded answer saying that the market's early, and there's a whole class of people that need to come into the market, that will come into the market, that aren't going to tolerate a lot of this other stuff.
Very interesting. I want to ask you, obviously you conceptualize these projects in terms of traditional valuation companies, et cetera, but also in terms of networks. One kind of piece of FUD that always I have difficulty with a lot of altcoins is just generally speaking what the degree of node participation rate is, how many people are truly contributing to the decentralization of the network, besides the core team, because, I know a lot of crypto enthusiasts, you could say, but very few people who even, run a Bitcoin node or a Lightning node or an Ethereum node or any of these kind of fundamental pieces. So is that a kind of, I don't want to overuse the term systemic risk, but something a lot of people don't think about, that there's just not huge amounts of distinct parties actually running the networks, or is that not a legitimate concern for some of these kind of
I would say you are a 1%er. You are a 1%er to even understand that. I agree with you. So most people don't even get that. Most people that are out there, when they think about this, they're not thinking about these things as networks. And that's what they are. They need to be valued that way. They need to be evaluated that way. They need to be measured that way. And ultimately, what we're doing, I love Niall Ferguson's book, The Tower and the Square. Have you read this book? It came out a while ago. But basically,
I've not. I heard. My only advantage is hearing you make a similar analogy in a podcast on research.
Yeah,
I'm sure there's a lot more nuance to what you gave.
Yeah, and by the way, it's not a crypto book. It's a history book. It's a book about it's a book about value, and how value has gone from, a world of towers to the town square, which are institutions, right? The banks, et cetera, to the real world, which is networks. It's the town square. right? It talks about the Rothschilds and how they were smugglers, and the reason why they created all their value is because they were smugglers, and they had a network of smugglers all over the world, and the British government used them to move gold around during the wars. So anyway. And I love it. I love that analogy because that's what this is about. So if we're investing in these networks and they're growing or they're not growing or they're performing some value or they have some velocity, then the way we evaluate these things, the way we value these things, the way we predict or try to estimate what they're going to do really has to be about how we understand networks and how they grow, who's on them, what kind of nodes, are they super nodes, how many people are staking, how much is being staked, what's the total value locked, what's the velocity. And by the way, one set of analysis for each network it may not be the same. In other words, you might have one network that is really all about velocity. And so you really want to look at it as comprehensive, how comprehensive it is, how fast it is, and what the overall velocity. Whereas something like an NDAO, you don't care about velocity. In fact, you want it to be almost dead because what you really want is total value locked. You want people in a long-term store of value to basically take their currency, load it in the network, and just kind of hold it. And so you really got to look at those. And I think you're, from my perspective, you're probably in the 1%. And I bet you it's 1%, maybe 5% of the population that really groks that really understands, guys, we're looking at networks here. And how those networks, grow. And that's what you got to, and by the way, it's also, there's a huge amount of behavioral kind of dynamic to it. The whole FOMO, the whole, pump and dump, it's, and all of those kinds of things. And I'm a long-term buyer and a long-term holder. I'm not going to pump and dump anything, because my analogy that I always say is, selling now is like, doubling your money on Amazon at an IPO thinking you're a rock star.
Sure.
Like, that's just ridiculous. If you really truly believe that only 10% of the world is here and that 90% of the world is going to be here, then why the heck would you be selling right now? Whereas I think what I've seen in the crypto world is everybody's just chasing that speculative gain, and they don't even understand what the heck it is that's happening. Is it Doge? And Doge is a good example. What the heck is that? Right? It's just pure speculation. To me, that's not good.
No, I agree. That's kind of, talking again about the networks, that's kind of a fundamental. I don't know how much you've put into the Solana ecosystem. I didn't see any Solana bets in your portfolio, at least any explicitly, and just the hardware requirements too.
I got to tell you, one of the biggest mistakes I made. We met the team, and I don't know what it was in the middle of, it was like right as COVID happened. It was early. It was way early, and it was super early. And we met the team. We loved them, and it was just, we were reeling with COVID, and we just. I'm kicking myself, So you
don't think there's a network problem necessarily with Solana from a infrastructure layer, just because I've not dug into this too deep, but from what I understand, the capital requirements to participate in a actual hardware sense are just pretty extreme. And is that an issue?
I think they do have issues. And I think a lot of them.
My Bitcoin node was $250.
What's that?
Right, which is pretty affordable. A Raspberry Pi for Bitcoin with a terabyte of storage will give me another 5 or 6 years, and that was a $200, $300 entry point. Right.
Yeah, I think it's early. So I don't generally. I think there are some issues there, but I think it's early, and I think there's a lot of excitement around it. These are all. I mean, they're all super early, and that's the tough thing. I love Hedera. I love these guys. We're an investor in Hedera. We love what they're doing. We there's a lot of exciting stuff coming down the pike, I think. And obviously they're Carnegie Mellon guys, which I have some affinity to, being at Carnegie Mellon. So we love those. We love the Casper Labs, that team doing some interesting things as well. But I think there's a lot a lot going on in that arena, and it's got a long way to go. But eventually, it's going to come down to adoption. Eventually, it's going to cost. What are the cost dynamics? The adoption
Adoption of hardware or adoption
of the
of
network, of the tech, of the protocol. Yep. Yep.
So one other startup that you have, like I said at the beginning, you've had a long and interesting career. Is you had a very interesting. I don't know if it was intentionally a gaming startup, but it had gaming applications, right? Your kind of chat box. Is it a chat box or more voice kind of feature? So what is kind of your background in the gaming side of things and some of your takes? So your background, non-crypto gaming in the past decade or so,
Yeah.
and then the perspective that gives you on some of the developments we're seeing.
Yeah, I spent a lot of time in the gaming. So I was the chief product officer of a company called Vivox, and you might know Vivox if you're on an Xbox or a PlayStation. You might see the logo every single day because we basically invented spatial voice over IP for gaming. And that company was purchased by Unity and is now baked into everything from World of Tanks to Fortnite, PlayStation Network, and essentially when you're on Fortnite and you're smack talking, the guy you just beat, that's Vivox. So I spent a lot of time in that space, primarily, all around this voice over IP world. Also in the virtual world, kind of, Second Life, that type of thing. They did all the voice for Second Life as well. In fact, most of the technology was really invented for Second Life. It has distance attenuation so that when you're talking to somebody, the volume goes down, all of that good stuff. Yeah.
So what are some of the things you think about in the gaming space? Is that like decentralized gaming? Like what are the kind of unique advantages to... Like, is it something that has unique advantages for a gaming universe to be decentralized versus, or is that something where we're just kind of like, well, let's throw a blockchain on it because we're
I believe that. So one of the areas that we're looking at right now, we're getting ready to make an investment in the space, is the NFT side, and I can't stand that the press and everybody's talking about NFTs, about the NFTs themselves. Like, I don't care about the NFTs themselves and what they're selling for. And this guy paid $100,000 for that. And I don't care. All right. To me, they're digital Beanie Babies. Like, most people don't even know what Beanie Babies were, but what was it? 10, 15 years ago, 20 years ago, everybody was buying Beanie Babies.
Collector hype.
What's that? Collector hype.
Collection hype.
Yeah, collection hype, right? Yeah. Pokemon, gotta collect them all. For me, what NFTs really mean are decentralized digital rights management, royalty management. Everybody in the world, phase one of the internet was what? Decentralization of content. Meaning move the world where you had ABC, CBS, NBC, and a couple of movie studios, and that was it. And they owned it. They owned media and the newspapers. They owned it. And now we have a world where all of us produce content, micro content, Instagram, you name it, videos, podcasts. Everybody is a content creator and a content sharer. And it turns out that all of our royalties, all of our digital rights, and all our royalty contracts are still the old system. It's like we're still using the Medici dynasty banking system. We're still using the media, system that was the rights system that was created, hundreds of years.
With pen and paper record keeping.
That's right. And so it's crazy. And so for me, what NFTs represent is now all of a sudden I can write smart contracts on a blockchain that have my royalty rights, so that when I create content. I just saw this really cool content, this NFT platform. I go in, I take a picture, okay, I upload it, I say I want to make an NFT out of it, and then what I do is I say, okay, I'm going to donate this much to charity, this much to the promoter, this much to the market, this much on secondary sale. So basically, with a bunch of drop-down boxes, I'm basically creating a digital royalties contract. Digital, and then I can upload all my actual license to it, all that's packaged up, embedded right into the NFT. And now that NFT can be sold on Shopify or OpenSea or on Instagram or Twitter or wherever it goes, and it's going to be managed on that blockchain. I could put I could put rights to it. So now let's say I'm Kanye West and I do an NFT, and what it does is it gives me lifetime privilege to Adidas to go, get Yeezys before anybody else does. I don't know,
exactly.
Right? That's right. Because people say, well, I could just right click copy. Well, you can't right click copy that. Right. So
exactly.
I think I don't.
It's the representation versus the ownership.
Yeah. So to me, this is bigger. I don't know. It could be bigger than money itself, right? Thinking how much of our world is based on media. So that's another area that I'm pretty darn.
Those are the only NFTs I've purchased actually, are Access NFTs,
yeah.
Where there's a content creator I like.
Yep.
And there's privileged access to things that they produce, or potential privileged access to. I mean, just again, you're just a super fan with super privileges that are provable.
That's right.
And then potentially distributable. So those are the only ones I've purchased today.
And by the way, I don't
turn the camera around. You can see my 50 copies of the Gary Vee. So.
Yeah. I mean, by the way, I don't think we figured it out. Like, this is new, right? It's like having all of a sudden we've got this technology, and they're like, whoa, right? I saw this really cool company that you basically put yield on an NFT. All kinds of DeFi constructs you could add to that royalty contract.
There's one where they're like bonds, and then the bonds themselves are artistic.
That's right.
Which is really interesting.
Yeah. It's cool stuff. And I what a time, right? And for me, I kind of think of it, I'm really, I spend a lot of time just thinking about the macro side of it as well, right? Just the Tao of it, the reason to be, why this is so important right now, and I say it, 50% of the world, less than 50% of the world has a bank account.
Yep.
But more than 75% of the world has one of these. Depends on who you look. It's as high as 80%, as low as 65, 72%. I think I've seen the latest numbers. So now all of a sudden, you've got a whole group of people that can now be part of the economy, be part of the
permissionless,
the permissionless and by the way, they become value generators. They're not value suckers. They're not sinks. They're sources. And that so now all of a sudden the global economy just goes up, right? By what? By what percentage? To me, wow, that's exciting stuff. And as an investor, the alpha there is going to be you can't even. I don't think you're going to be able to measure the crazy alpha that's going to come out of all of this at scale.
By owning some of the fundamental pieces.
Yeah, at scale.
Definitely. So if you had to be a founder in this ecosystem, let's say you don't have a ton of capital, and the way you want to create capital is by starting a project, right? You don't have the successful exits or roles you've had in the past. What are some of the pieces of the ecosystem that you'd personally be building in if that was kind of your only option?
If I'm trying to understand the question, you're what area, what topic would I start it, or how would I start?
Maybe a problem. I mean, if you have a super narrow problem that you're like, I'd be, building this is the first that comes to mind just because it's the episode we're publishing today, but Ethereum doesn't have private transactions, so I'd be building something like Aztec to make private transactions.
Or Dust Networks, right? We're an investor in Dust.
Yep. Another example.
Yeah,
I'm only saying mine because it's a top of mind based on the episode I'm publishing today. But perfect example as well. But what if you had to be a builder and you had to the only way you could contribute in this, you didn't have capital to invest, so you kind of had to start a company. What would be some of the opportunities that you think are, I don't know if they're low-hanging fruit or not, could be based on, the skill set you have. But
yeah, look, I think you got to be, first of all, you got to be knowledgeable of what you're doing. I think, number one. Number two, you got to be passionate about it. Because think about it. If you're gonna go spend a lot of blood, sweat, and tears and sleepless nights thinking about something, you better love it. Because if you don't love it, you're out. I'm out. Forget this. Okay. So it's got to be something that you really truly enjoy and have an interest in, and are excited about it. The general mistake I think young entrepreneurs make is they're too eager to act, and they don't do the research up front. and I mean really learn what it is that they're going after and who the players are and how it works out. So for me, I think you got to do the research, you got to be passionate about it, you got to want it, and then you can really jump in. And I don't believe you need a lot of money to go after these markets. I believe that if you're passionate enough and you have a good enough team of people, one or two people, you can really create some pretty amazing things. I would be less worried. It's all about in the Navy. There's a fighter pilot who basically wrote the book on fighter combat. It's called the OODA loop, and it's what the SEALs observe, orient, decide, and act. Harvard has a case study on it, and there's a book got written on it. And in fact, agile software was built on basically the premise of Boyd's OODA loop. And if you look at Ray Dalio and his book, The Principles, and he calls it a loop, it's the OODA loop. Okay. And basically what it means is make decisions fast with as much information as you have and adjust. And adjust, because you're going to be wrong, and it's okay to be wrong. Just do it quickly and adjust, and it's it's the fast feedback loop, right? It's kind of like the difference between waterfall software development. Why does that suck? Because if you spend 6 months developing something, planning and building, and then it's wrong, it's a big mistake. Whereas if you just do it in 1 week cycles, you make a mistake. What's your risk? Same thing here. So what I would say is
lean startups, the same model as well.
Yeah. So what I would say is just get stuff out there, just get stuff out there and try it and see. But also here's the other important point. Don't forget what you're building. You're building a network. And if you're building a network, what does that mean? It means you need nodes, you need connectors, you need other people in your ecosystem all helping you. You're not going to do it on your own. You're not going to do it as a tower. You're going to do it as a network. So, build that network. Your job as an entrepreneur is to create a gravity field. I always say an entrepreneur is like a gravity field. If you're doing it right and you're passionate, if you're full of passion is like the black hole. It just sucks people in. Right? Did you ever notice if you're really excited about something, all of a sudden everybody's joining you? They're listening. They get excited with you. They want to join you, and they want to be part of that. That's what it is. So you're building a network, and building a network is what? Connecting nodes. And if you're going to pick one node over the other node to join your network, which node do you want? You want a super connector, right? You don't want a node that's not out in the South Pole that has one guy connected to it. You want the node that's got millions of people. You connect your node to that node, and boom. That's what we're doing here. I know it sounds high level and kind of like mom and pop, but I think you really got to think through it as an entrepreneur.
Yeah, I hear a lot of people, especially college students and people who kind of like are ambitious or whatever, or like, how do I meet interesting people? And the answer is kind of like do interesting things, and then the gravity kind of forms. But I kind of want to. That was a good answer conceptually, but I'm kind of curious if there's any more specifics. So a way to rephrase it that might be helpful is like, where are some industries in crypto or problem spaces that you kind of think to yourself, if only there were more engineers on this problem? Like, the
NFT side, and I again, can I just call it decentralized digital rights management? Because
I think this is back to this is like a kind of fundamental thing with what I was talking about with Bitcoin and networks and nodes. Is I think what's really helpful for people is just to like speak the full phrase, right? Because like people have like associated NFT with digital.
That's
art,
right, and it's not.
But, like if you say non-fungible token, then people might actually think about what it represents. So it's like, or you just call it like ERC 721 inspired like technology.
That's right.
Or something.
That's right. I think that whole market is just.
It just needs a separate word.
It's digital rights management. It's decentralized digital rights management, DDRM. That sucks, but anyway.
Token-based ownership.
There you go. Right. I mean, my son is in the esports.
The word says it all. That's the problem.
Yeah, my son's in the esports.
The word says it all.
What's that?
And the acronym says nothing.
That's right.
So the acronym says nothing, but if you spell it out, you're like non-fungible tokens. Yeah. Which just means
That's right. That's right.
Things that are unique.
Yeah, my son's in the esports arena.
Meaning comes from unique.
Yeah, and
so your son does esports.
Yeah, he does esports, and that's a whole really interesting space. I think with the digital rights management. All about streaming and how do you manage that and how do you play that. Membership models. Have people really thought about membership models when it comes to digital rights management and how does that play out? I believe there's a lot of opportunity there to start a company, start a project, and they're getting funding. These deals are getting funding at crazy valuations. So
One thing I've heard, it's kind of like an analog of. So I've heard a lot of investors, and even when I was doing the job search and applying as like an analyst to a lot of different funds, they're saying, what are your predictions for DAO tooling, right? That's like everyone is focused on DAO tooling because DAOs are a thing, but there's no DAO tooling for like actually governing these things. So you're kind of saying like a membership tooling, membership infrastructure.
That has the media layer. And by the way, I haven't really seen a whole heck of a lot of DAO tooling that I think is really great or flexible enough, right? But sure, that's another area. Another area is just kind of Web3. And again, as Web3 is just so generic, right? But what does it mean to truly be decentralized web? How does that play out? How would you imagine Twitter as a decentralized platform, or Instagram, or e-commerce, or Amazon, or some portion of that? And then how does that play out? Those are super high level stuff. On the micro level stuff, I just think, royalty management, digital rights management, platforms for that. And then, then there's a whole lot of other just kind of, infrastructural problems as well that are going to grow up. We're really excited about decentralized exchanges. It makes no sense to me to have a decentralized world and have a centralized exchange. Absolutely zero sense long term.
Besides just more clear regulation and the status quo.
Yeah. I don't see it lasting. I can't imagine. I just don't see it lasting. I think
like the order book model in general, or just
I think it's all got to go decentralized. Has to, by definition, has to. It's too big of a risk.
Even for, let's say like late majority type adopters.
For the late, so here's the opportunity as an entrepreneur: build a decentralized exchange that a late majority can understand and use. What does it mean? What does it mean? Here's another thing, right? So if you're thinking about it in terms of problems and solutions, what does it mean to truly create a sovereign wallet so that all your digital assets are under your keys, in your control, and you have custody? What does that mean? And by the way, the you there, what if that you is a corporation? What if that you is a partnership? What if that you is
corporation
and wife
wants sovereign ownership of their keys as the corporation, but then what does it mean for what individuals within the corporation have the the codes or the key to the locker with the information or whatever as well? So those are really interesting questions.
Right. By the way, NDAO has all that, has a thing called chain code on the blockchain that allows you to create multi-sig wallets and write the code. So it says, okay, I need 2 of those, or can I do a revoke and replace? So if I hold the master key, what if I create 2 valet keys? And if the 2 valet keys come, they can revoke and replace the primary key. So those are kinds of things that I think, again, you got to look at it. The late majority's got to be able to work this stuff, and we're just not there yet. We'll get there. It's just it's kind of like in the early, when I did Galt, the first financial service on the internet. Do you know you couldn't connect to the internet in Windows unless you downloaded this DLL called a WinSock DLL that nobody knew what the hell it was, and everybody went around, and oh, by the way, there was no internet to go download it from, so how the heck did you get it?
Get a copy.
You had to copy. Everybody's copying around.
Physical storage device.
That's right. And then there was this guy, David, I think David Spool, I think his name was. I don't know. He created a company called Spry, and they created this product called Internet in a Box. It was basically a bunch of floppy disks that had the WinSock DLL in it and the Mosaic browser, and it allows you to connect to the internet. Anyway, I'm going on here. So I think there's a lot of
So,
interesting, as an entrepreneur, there's a lot of really cool, interesting concepts that, uh, that you could jump on.
well, I think I have one final question for you. It's not really thematically a final question, but going into the next year or so, what do you kind of, because I know you have some bets in reg tech, and I had to look up that acronym, full transparency, to like know what that was, and regulation technology, basically.
Yeah.
What do you think are some like regulatory best case scenarios for the next few years for the industry broadly?
Well, my high level concept about regulatory and compliance is that regulatory and compliance are essential, because if you think about them, if you think about going back to the product diffusion theory, they're not essential for a visionary. They don't care. They're not essential for an early adopter. They don't care. Oh, I lost my money. Oh, that guy scammed me. Whatever. I don't care. Okay, because they're too enamored with the returns and the potential of alpha and what's going on. By definition, early adopters are people who aren't afraid of the pain for the gain. In fact, they almost brag about it. Okay. Whereas for the early majority, they do care. And so what I've seen is every time a regulatory body comes out with clarity on what is happening here and people can understand those guardrails, the market, what happens is the markets go up. Why do the markets go up? Because there's now a whole group of people who were afraid of it before, who are now not, they're still afraid of it, but not as much. And they're willing to take their risk. They're willing to put their money in. So for me, regulatory clarity is important. It signals to the rest of the market, this is okay, the water's fine, there aren't any sharks, come on in. And so the more we do to educate the regulators on what's going on and why this is important, and don't do anything stupid. So for me, I feel like I believe that the regulators understand the scale of this and how big it is. And so I think we're going to start seeing more and more and more clarity as we circle around in this, and more controls. Right, 2 years ago, nobody KYC AML wet, and now it's everywhere, and it's essential. So I think that's what you're going to start seeing as more and more people enter the market. I know it's like long-winded, but I think it's important to understand that where are we in the market? We're still early. So we got a long way to go, and that's okay.
Well, I think we will close things off there. Rob, thank you so much for coming on the podcast, sharing lots of interesting ideas with us. Absolutely. And I don't know if you have like a public brand online or anything, but if people curious about your funds, curious about any of your individual thinking, what would be the best places to keep up with that? I'm
at Rob Frasca on Twitter, and our website is COSIMOX.com. After Cosimo Medici, COSIMOX.com. And you can take a look at our portfolio. I do a lot of videos, and be happy to have you follow me. I appreciate it.
Great. Thank you so much.
Thank you.
And that wraps up this fun solo interview with Rob Frasca. I enjoyed it. Kyle's not here to say if he enjoyed it, but you know what? I'm going to make him listen to it, and he's going to like it. 3 takeaways from me from this conversation. The first one, kind of a subtle takeaway, but just the common pattern among successful entrepreneurs to recommend Ayn Rand's books. Just interesting side note there. Atlas Shrugged. Still need to read it. I've read The Fountainhead, found it great. If you've read books from Tim Ferriss like Tools of Titans or Tribe of Mentors, he always asks these other fascinating entrepreneurs, successful people, etc., like what some of their most recommended books are. And again, we see Ayn Rand pop up. So just pointing that out as an interesting pattern that Rob also fits into. Second takeaway is about the kind of gravity and serendipity analogy that Rob was making in this conversation. That's a lot of the motivation for why Kyle and I started this podcast, was kind of recognizing that if you do interesting things will happen to you. If you're in interesting places with other interesting people, you'll have these opportunities that you wouldn't otherwise have. We saw that in like a recent episode with Matt Slater, how living in San Francisco, that's how he discovered Bitcoin so early. But by doing interesting things in interesting places with interesting people, he kind of had that opportunity that really propelled his career. We saw that for Rob going to Carnegie Mellon with a ton of other smart people passionate about these interesting things. and you can kind of get your own serendipity by doing interesting things online if you're not in a interesting physical location. Third takeaway is just about how amazing the fundamental shift in startup costs have changed for the better. He was talking about the extremely expensive infrastructure it took for him just to be able to put up the website in the early internet. I mean, $20,000 of equipment costs just to get started. And now things are like pennies or tens of dollars. You maybe a couple SaaS software and you're out the door like $50 a month. It is completely different. And we should all be grateful for that and use that as motivation to take this great opportunity to start businesses and do interesting things. That's all I have to say for this conversation with Rob Frasca. I hope you enjoyed it as much as I did. If you want to support the show, which I hope you do, because we appreciate your support, definitely make sure you're subscribed wherever you're watching or listening, whether that's YouTube, Apple Podcasts, Spotify, etc. And just share the show with a friend. We've got a lot of episodes. They cover a lot of interesting topics. I'm sure you know someone who'd find one of those things interesting. And if you really can't wait till next week when we publish the next episode, go through the feed, check out one of the ones from the backlog. They're all similar to this one. We don't ask about current events or anything like that. That would make them dated. So I'd encourage you to do that. Until next time. See you then. Bye-bye.